The Dow Jones Indices stirring up the makeup of the Dow Jones Industrial Average. Amazon set to join the index, taking the place of Walgreens Boot Alliance. That change takes effect prior to the open of trading on Monday, February 26th. Now, here to discuss the methodology behind it, what it means for that average investor, we want to bring in Howard Silverblatt. He's S&P Dow Jones Indices Senior Index Analyst. Howard, it's great to see you here. So just talk about the significance of this change and what it means to the average investor out there just in terms of their industry exposure going forward.
Well, there's only 30 issues. It's not like the S&P 500. And we do not change the index. S&P does not change the index too often. There's been about 60 changes in 127 years. So change is a major item, a major consideration. At this point, the thinking basically is obviously the economy and the markets have changed and we needed additional exposure. And Amazon offers that exposure at this point in time. Also, Walgreens has somewhat declined in stock price, so since it's price weighted, doesn't have that much of an impact on there. If you wanted to stay in that field, you would have to find a higher priced stock in there. We also had Walmart's 3-for-1 stock split that reduced the weighting within the index. So again, the index needs to stay relevant and reflect the higher end of the U.S. markets on here. And Amazon was a natural selection at this point. Consumers, enterprise, different areas, the exposure that it gives to the index. For the average investor, it'll mean that the index itself is more reflective of consumer selections at this point in time. And that happens on a regular basis. To some degree, Amazon is no different than when we put Sears Roebuck in the 1920s. It's still a retail where consumers are going. By the way, Sears was taken out in 1999 for a company called Microsoft. Again, the index needs to be relevant. We do not like to change the memberships in there. We'll prefer the consistency, but at times it has to be done because as the economy changes, the index has to change.
When you have a company like Amazon that is a beneficiary of so many different segments within its business, whether that's cloud or whether that's its investments or its play in AI or the consumer and strength or resiliency of the consumer, that relevancy also can kind of lead to being lighter fluid when they are especially beneficiary of so many different areas and potentially propel the Dow to, 40K very soon as well? And so what type of relevancy as you make these changes, as we consider in the markets, digest these changes, how does that propel us towards some of those other all-time highs as well for the Dow?
Well, in this case, the actual mechanics of the split and adding Amazon actually did increase the target price. That's the estimate for 1 year, not from S&P, but on the street. We do not choose stocks based on whether we think they're going to be going up or down. Actually went up to over 42,000 for the 1 year. From the 41,000. As far as the Amazon makeup, yes, some of the other fields that it's getting its sales from and some of its profits that are still growing is somewhat of a plus because it's developing and it's giving you a bit of exposure in a few other fields where we would have wanted to increase on it. But mostly you're dealing with the consumer sector, the retail sector, where the bulk of it is in right now. And that's positive because the consumer is the biggest part of the economy in there. And again, at this point in time, we're better able to reflect it. And the 3-for-1 stock split was kind of the catalyst to the event at this point in time. It wasn't the major reason. You're always reviewing what's in and what's not in the index. And again, you try not to do a lot of changes. So you really need a reason to be taken out to some degree, such as a merger or a deterioration or a relevance in your price.
So, Howard, we have that change. We also have Uber replacing JetBlue in the Dow Jones Transportation Average. Talk to us just what this tells us about current industry trends.
Again, similar in nature here. JetBlue did kind of decline in its price, so its relevance within the Dow Jones Transportation was minor on there. Uber is a very popular stock. Again, as far as expenditures go and consumer. And the intent here on the transportation is to look at the ground transportation as well. I mean, outside of Avis, there's no real ground transportation in the Dow transportation itself. So Uber was a good fit into there to giving it the exposure, again, to expenditures. The Dow overall is actually transportation, which was originally the Dow Railroad, is the oldest existing indice, even before the Dow Jones Industrial Average came into play. It was originally known as a railroad industry, and there are 11 issues in it.
Such a great pleasure to always get your insights here. Howard Silverblatt, S&P Dow Jones Indices Senior Index Analyst. Howard, we appreciate the time as always.
Thanks for having me.